Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Termination. The White House studies whether it can remove Fed Chair Powell. The dollar weakens to new lows for the year. China's warning, don't cut U.S. trade deals at our expense. Meanwhile, Beijing slashes imports of American commodities. And Pope Francis has died Monday morning in Rome after being hospitalized with bronchitis. The pontiff was 88 years old. A historic moment this morning, but first we start with the markets, where Sell America is gathering steam this morning. Euro was at the strongest level since 2021 against the greenback. Fears of attacks on the Fed's independence. Kevin Hassett saying that it is being studied, the ability to remove Powell. The dollar weakening against all of its major peers this morning. The bond market isn't trading at this moment. It is off at a lunch break. We do have Europe off for the holidays, so it is this moment in between the Tokyo change and today. There's your equity market this morning. It is weaker. Again, it is the Sell America narrative gathering pace. Your S&P down and NASDAQ down more than 1%. Again, to the bond market, we are looking at a curve steepening. We aren't trading in the cash market quite yet. That should come around 7 a.m. New York time with Europe offline. Gold hits another all-time record, up 2%, while Brent crude gets caught up in the bearishness. Some individual stocks we're keeping our eye on this morning. Tesla, those shares are falling in the pre-market session. Let's get a check on those, down more than 3 1/3%. Wedbush Securities analyst Dan Ives out with another note this morning, warning about code red. If Elon Musk doesn't refocus his attention on Tesla, Tesla will be reporting earnings tomorrow. TSMC, those shares also falling in the pre-market trade, down 1.7%. Its Arizona subsidy posted a loss. Analysts at the challenges of ensuring export control compliance by its customers. To the upside this morning, Netflix is gaining in the pre-market, up nearly 3%. Post-close on Thursday reported first quarter profit that exceeded Wall Street forecasts. It is the first time, by the way, that Netflix reported financial results without disclosing how many customers it added or lost. We got a great hour coming up for you. First, we're going to be catching up with Alfonso Peccatiello, the Macro Compass CEO, and Sitara Sundar, JPMorgan Private Bank Global Equity Strategist, will be joining us later. So back to our top story, dollar dropping to the lowest levels since January of 2024. It is falling against all major currencies this morning. Investors are weighing whether President Trump's threats to remove Fed Chair Powell and what it means for this market. Joining us now is Alfonso Peccatiello, CEO of the Macro Compass. Alf, great to see you. Thank you for joining us on this Easter Monday. What do you make of the threats and the resulting dollar weakness?
Well, as always, you should weigh probabilities when thinking about events in markets. But I think in this case, even if the probability is actually lower, it's actually very low. It doesn't even matter much. You are talking about bringing the policymaking of the United States into an emerging market framework. Literally, that's what you're talking about. You're talking about a president or somebody who controls, let's say, the government side of the policymaking, effectively trying to influence the central bank, which is something you have seen in Turkey, in Brazil, but you have never, ever seen in the United States. So attaching a premium to U.S. assets is absolutely rational here.
Does that mean that it makes sense, Alfonso, for assets to trade in the emerging market way? That is dollar weaker, risk off, and yields higher.
Yes, that's what we are seeing. So this is something which in emerging market land, or the UK recently as well, is commonly called the bond vigilantes trade. It means basically the bond market tries to discipline the policymakers by attaching first the premium to long-end bonds. So long-end yields go higher, the curve steepens, and then this premium gets also reflected in the currency, which is weaker, and equity markets as well, which are simultaneously down. So in history, the last 50 years, in the United States, something like this has happened already 11 times, but only if you focus on very short time horizons, like let's say for a month. So you should be very careful about distinguishing between macro deleveraging, where all asset classes are sold together, and the bond vigilantes trade, which instead is a much longer time frame. It's really a policy, a regime change. Now, of course, this April has been, or March, April has been another month in which dollar was down, S&P was down, and yields were up. If this were to continue, you could actually move from macro deleveraging to a proper bond vigilantes trade, and this will be the very first time it really happens in the United States. Again, it's about asset allocation. You should think here what the Canadian pension funds and the Swedish asset managers are thinking. when this happens to their portfolios, something that's never happened before, and also basically they can't really backtest. They just have to behave the way they think it's rational.
Well, it goes beyond just asset allocation, Alfonso. You have the deep liquidity of the Treasury market and the dollar, let's be honest, a huge underpinning of global trade and of global financial markets. When you look at something like this is what you're mentioning, duration getting hit hard, the 530s yield curve, the steepest since 2021. If we enter a period where the U.S. looks like something, as you say, of bond vigilantism, not just a deleveraging, not just a fire sale, what are the global ramifications? What changes when you have, again, an asset that underpins basically all other assets and is such an important part of the global macro environment?
It's a great question. Look, for the last 15 years, if you were a foreign investor, whether you're Canadian, European, Norwegian state fund, doesn't matter. You were basically rewarded to buy U.S. assets and hedge the currency risk as little as possible, effectively, because dollar went up and dollar assets went up. And now the paradigm can be completely reversed. So what really matters here is to figure out what are the other assets that are investable? What are the other markets that actually can welcome these capital flows? And Europe has a gigantic historical opportunity to welcome these foreign flows because it is a very large market, it is a very deep one, and the equity markets of Europe have been neglected basically for a long time at the expense of the United States. So you need to start thinking about who can take part of these capital flows, which have gone one direction for the last 15 years. And I think Europe is a great candidate.
There is, though, a degree of trade still happens in U.S. dollars, Alfonso, and that's something that's extremely hard to break. How far can we really push this narrative?
Yeah, that's another good observation. And here, I think people should think in marginal flows. So it's very, very hard to imagine that the PBOC will dump all their treasuries. It's just not safe risk management. They need some dollar collateral because they continue to trade in the meantime, mostly in dollars. So it's not about dumping dollar assets. It's about thinking where the marginal flows goes. So when you receive the next dollars because you're Brazil and you're selling soybeans, what are you going to be doing? Are you going to be reallocating these new marginal dollars back 70% in dollar assets, or are you going to be shrinking the amount of dollar assets you own in the new allocation of assets? So it's more about the marginal flow, which I think is very large. I mean, we're talking about trillions of dollars here. And if a small percentage of that goes, let's say, towards Japan or Europe rather than the US to the same extent of before, I think that matters a lot for the performance of equity markets, currencies, bond markets. We are seeing the very first signs of that. And I think there's a lot more to go unless, like in emerging markets, the policymakers change their stance. Really, that's what we're talking about. They need to discipline themselves, or I don't see a way out of this very, very large regime change we're watching.
That's literally what I was going to ask you, Alfonso. Is this inevitable unless we see a policy pivot from the White House? Because there is this argument to be made that corporate America is incredibly strong. It adapts really well, and that means we retain our American exceptionalism because of the strength of the companies here. Is that an argument that is fair at all, Alfonso, or is it policy pivot, or this trend happens and continues?
So there is an argument to be made there in the sense that U.S. corporates actually are amongst the, let's say the U.S. stock market is comprised of corporates that actually make most profits abroad. It's one of the markets where U.S. earnings are generated actually abroad to the largest extent. So a weaker dollar, well, actually helps U.S. companies. So you need to bear that in mind. And you also need to bear in mind that the U.S. stock market is still comprised of very, very large and competitive and moat-like companies. So I'm not talking about the US per se. I'm talking about the relative value of foreign currencies, foreign markets versus the US. And well, if you look at the last 15 years, in relative value terms, US stock markets and the dollar have trounced anything around the world. So the reallocation, again, in relative value, not in absolute terms, but in relative value, I think is a lot more to go.
Yeah, a really important distinction. Alfonso, thank you so much for spending your time with us this morning. That is Alfonso Peccatiello of Macro Compass. All right, let's get back to one of our top stories this morning. Pope Francis has died at the age of 88 at his residence at the Vatican's Casa Santa Marta. He had been hospitalized in Rome in mid-February with bronchitis, which progressed to pneumonia in both lungs, the last in a litany of respiratory and other medical challenges he had faced. On Sunday, he had met with U.S. Vice President J.D. Vance. Joining us now is Bloomberg's Donato Paolo Mancini from Rome. Donato, great to see you this morning. What is the latest?
Well, good morning. Thank you so much for having me. So as you say, the Pope passed away this morning. The Vatican made a statement about an hour and a half ago saying he passed away at 7:35 this morning. He died in the Vatican. He had been hospitalized for about 5 weeks and was discharged last month after a complicated set of infections, which included bilateral pneumonia. The Pope had been kind of kept away from public engagements, but had returned to some of them. And as you rightly said, he met with US Vice President J.D. Vance yesterday for a very brief private visit. And so tributes are starting to pour in, essentially, for the passing of Francis, who was 88.
Donato, there's some firsts from this Pope. The first Pope from the Americas, a Pope who opted not to don perhaps more flashy outfits or regalia that comes with the pontiff. Just how different was this Pope? What is his lasting legacy going to be?
I think his lasting legacy is one of advocacy, perhaps for migrants, for those who have less in general. He was the first Latin American Pope, as you said. And I think his message was one of essentially of sharing, of making sure that everybody could get to the same means and to the same things as everyone else. His defense of migrant rights or refugee rights was quite strong. It was quite vocal. He essentially criticized the Trump administration's stance of enforced deportations earlier this year in a very not veiled message, which obviously drew a response from the White House in the sense that J.D. Vance praised the Pope and said he would still stand by his policies. But I think he will be a Pope that is remembered for his advocacy. I think that's clear.
Donato, thank you so much for joining us this morning on an Easter Monday. Bloomberg's Donato Paolo Mancini. Again, Pope Francis has died at the age of 88, the spiritual leader of the world's 1.4 billion Catholics. Since March 2013, Francis hailed from Argentina, making him the first Pope from the Americas, as well as the first Jesuit to hold the position.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
The conversation, I'm sure, happening at Easter tables around the weekend. Can the White House actually fire Fed Chair Jay Powell? All of this kicked off with a Truth Social post from Trump saying that his termination couldn't come soon enough. This was from Kevin Hassett, the National Economic Council director, on Friday when he was asked by a reporter if removing Powell was an option. He said, quote, "The president and his team will continue to study that," and that the policy of this Federal Reserve was to raise rates the minute President Trump was elected last time, to say that supply-side tax cuts that were going to be inflationary. And that Fed officials opted to go on TV and at IMF meetings and warn about terrible inflation from the obvious runaway spending of Joe Biden. So again, real criticism coming, and that concern. What does it mean if we do have a removal of the Fed chair? Can he even do that? You see weakness coming through in the dollar. It is at its weakest level, the Bloomberg Dollar Index, since January of 2024. The euro at its strongest versus the dollar in even more time than that, since 2021. You can also see the yen strengthening as well, stronger by 1.1% this morning. It is a concern of U.S. exceptionalism, of U.S. dominance. It is sell everything this morning. You also have U.S. futures weaker by more than 1%. By the way, we're about to get into the heavy part of earnings season. How will corporations be coping with this new environment? You also have a U.S. 10-year yield. I just want to be clear, that isn't trading at this moment. Europe is offline for the Easter break. That is the last close as of the Japanese lunch break. But what we have seen is a remarkable curve steepening. You have seen fives, the front end, been pinned not just by Powell and the expectation of cuts, which, by the way, he threw some cold water on last week. Instead, what you have is, will there be cuts if you have the removal of a Fed chair? So because of that, you've seen the 2s, 30s steeper by 12 basis points in the Tokyo session. Meanwhile, gold is at an other time high this morning. Gold trading at just under $3,400. Again, we're speaking with Alfonso Peccatiello of Macro Compass, who's saying that we have to reconsider where U.S. assets fall into portfolios. Does gold become the beneficiary? It is the thing that continues to trade higher. You can see NYMEX crude and Brent crude both falling this morning, 2.2%, 2.4%. And we, at the moment, are continuing to see bearishness really reflected in those risks assets, trading at $66 a barrel and $63 a barrel, too. Again, the concern is, and the talk is at this moment, Fed Chair Jay Powell and the concerns as to whether or not he should be removed. Let's get a check again on where we stand on FX markets. Just as we head to the break, it is a weaker dollar this morning as the euro strengthens. More to come. This is Bloomberg. It's your Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what papers have for their front page this morning. First up on the New York Times, leading with Pete Hegseth, sharing attack details in a second signal chat. Sources told the New York Times that the U.S. Defense Secretary sent sensitive information about strikes in Yemen on March 15th. The private group chat included his wife, brother, and personal lawyer. Next up, the FT leading with this, Chinese state-backed funds are cutting off new investments in U.S. PE. The move comes in response to pressure from the Chinese government. Multiple buyout executives said that Chinese investors have changed their approach since the trade war began, adding that they will no longer make new fund commitments to U.S. firms. And on the Bloomberg, Iran says nuclear talks with the U.S. are moving forward after a meeting on Saturday. The Iranian foreign minister saying his country has a better understanding with Washington on a range of principles. Discussions are set to continue in Moscow this week. Oil also retreating not just on that, but fears of the impact of the U.S.-led trade war. Oil down this morning more than 2.4%. Joining us for the latest is Bloomberg Horizon's Middle East and Africa anchor, Jomana Bersecci. Jomana, what is the latest with the Iran-U.S. talks?
Yeah, hey, Danny. So the second round of talks took place this weekend. Also in attendance, similar to the first round, you had the U.S. Special Advisor Steve Witkoff, the Iranian Foreign Minister Abbas Araghchi, and the talks took 3 hours, and they were similar to the first round of talks, also mediated by Oman. You mentioned now in the comments that the Iranian Foreign Ministry did say to their state TV that they walked away with a better understanding of the principles of what the U.S. are looking for. And this is perhaps in reference to what happened last week after the first round of talks. There was a bit of confusion as to what the U.S. side were asking for. Initially, Steve Witkoff suggested that the U.S. would tolerate low levels of nuclear enrichment so long as they were used for civilian purposes. But towards the end of the week, he walked back on those comments. And of course, Iran have said over and over again that the full dismantlement of their own nuclear program would be a non-starter for them. So the fact that these talks are continuing suggests that they do have a better understanding of what both sides are looking to achieve vis-a-vis this nuclear program itself. And actually, the Omani Foreign Ministry put out a statement saying this phase aims to reach a permanent and binding agreement that guarantees Iran's full renunciation of nuclear weapons, the complete lifting of sanctions, because that's a key criterion for Iran, and the safeguarding of its right to develop nuclear energy for peaceful purposes. And it's that last point, Danny, that I think people are going to be really latching onto, because already Iran is sitting at 60% uranium enrichment levels, which is very close to nuclear weapon grade material.
Jomana, thank you so much. That is Bloomberg's Jomana Bersecci. Now back to our top story, as we spoke about earlier, Chicago Fed President Austin Goolsbee warning about central bank independence just days after President Trump expressed his displeasure with Fed Chair Jay Powell. The National Economic Council Director, Kevin Hassett, saying that the White House is studying if they can remove Powell. Joining us now is Bloomberg's Bill Ferries. Bill, great to see you. Can they remove Fed Chair Jay Powell? It looks like we have lost audio with Bill. Bill, thank you very much for trying to join us again. Just to recap the latest news, we did see Kevin Hassett over the weekend. We'll try to get Bill back if we can. Kevin Hassett on Friday saying that they are studying ways to see if they can remove Fed Chair Jay Powell. Is something that has been a fright for this market, but will it actually happen? We're speaking with Alfonso Peccatiello, who said it was probably unlikely, but there are other fears in this market. Torsten Slok writing over this weekend that there are 90% odds of a recession. He calls it something of a trade-induced recession. The reason, he says, is because of the impact to small businesses, that 80% of the American economy is supported by small businesses. And should you see them deal with unable to get certain commodities in from China, certain trade items, they will go under, and it is something that is concerning. So it is a market that is reflecting both fears of the economy and fears of destabilization. Will we trade more like an emerging market? That is what you're seeing exactly in this picture. That is yields move higher, up by 3.5 basis points. That is a weaker dollar this morning, and S&P 500 futures also down by 1%. To look across equities, you also have tech getting hit even more hard. Those are down 1.3%. We're going to hear from some tech giants. That is Alphabet. They will be reporting earnings on Thursday. We'll get Tesla tomorrow with Dan Ives over at Wedbush warning about code red if Elon Musk doesn't take a step back from Doge and focus on Tesla. Okay, coming up on the show, Sitara Sundar, global equity strategist at JPMorgan Private Bank, will be joining us next. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Termination fears. The White House studies whether it can remove Fed Chair Powell. The dollar weakens to new lows of the year. China's warning, don't cut U.S. trade deals at our expense. Meanwhile, Beijing slashes imports of U.S. commodities. And Pope Francis has died this Monday morning in Rome after being hospitalized with bronchitis. The pontiff was 88 years old. Let's get a check on these markets this morning. It is a Sell America narrative that is gathering steam. The euro at its strongest since 2021 versus the greenback. Fears of attacks on the Fed's independence. People familiar saying that hedge funds have been selling the dollar weaker against all of its major currency peers this morning. It goes further than just dollar weakness. It is across assets. It is a stock market that is also weaker this morning, down by more than 1% across futures. It is a little bit more light on the volumes this morning, considering the fact that Europe is off for the Easter holiday. NASDAQ underperforms. We're going to get Google earnings on Thursday. Tesla comes tomorrow. Finally, it is also treasuries that have been weaker. They're on a lunch break until they start trading the cash market at around 7 a.m. this morning. So futures a little bit stronger, but gold is also at another all-time record, while Brent crude is down by 2.5%. A quick look on some individual stock movers. We're keeping an eye on Tesla this morning. Shares are falling in the pre-market. Wedbush Securities analyst Dan Ives warning about a code red if Elon Musk doesn't refocus his attention on Tesla. As I mentioned, they report earnings tomorrow. TSMC shares also falling in the pre-market. Its Arizona subsidy posted a loss and listed the challenges of ensuring export control compliance by its customers. Netflix, that is gaining in the pre-market trade, up nearly 3%. Post-close on Friday, it reported first quarter profit that exceeded Wall Street forecasts. It is the first time, by the way, Netflix has reported financial results without disclosing how many customers it added or lost. We're going to get even more earnings this week. More than 120 companies are set to report. That includes industry heavyweights like Tesla, Boeing, and Google. Joining us now is Sitara Sundar, global equity strategist at JPMorgan Private Bank. Sitara, thank you so much for joining us this morning.
Thank you so much for having me.
Look, it's going to be a busy week, and already we've seen this spat of downgrades coming, trying to incorporate tariffs in this unknown outlook. Just what are you expecting as you hear from companies? What are you looking out for?
Yeah, I think there's a bifurcation in what we're looking at in terms of 1Q releases and then forward-looking guidance. I think we all need to acknowledge, first, just taking a step back, coming into the first quarter, consensus is coming in at expecting 7% earnings growth. That's a meaningful slowdown from where we were in Q4. And there's a lot that's changed, I think, over the past few weeks. So what we're more focused on is forward-looking guidance, CapEx spending plans, if companies are even going to be putting out guidance given the uncertainty that we're seeing right now. But at the end of the day, I think what we're trying to focus on as equity investors is what we can actually control and what we can actually see in terms of the fundamentals. So we want to make sure that we're seeing growth and meaningful growth out of many of these companies, but we acknowledge that there's a lot of uncertainty. But if uncertainty starts to create volatility in these high quality names that have been on our watch list, we would be looking to use those pockets of volatility to add to some of those higher quality names that could be selling off on unnecessary weakness.
So a company like United comes out and says, here are our two scenarios. You have a scenario where we do really well, or one where we do really poorly. You have basically companies doing different scenario analysis in a way that they hadn't before. What do you do with that? How do you analyze whether this company is attractive when you have two bipolar outcomes for so many of these various companies, airlines, name the sector you want?
Look, it's a great question, and we're all trying to grapple with it. And I think we have to, as investors in this environment, have some humility on what we know and what we don't. But honestly, when we think about investing moving forward, even for us, when we're advising clients on what to do moving forward, we're also looking at the different scenarios that are out there and probability weighting what the most likely outcome is going to be. So when we think about advising clients on how to invest their portfolios for the long run, we're talking a lot about portfolio resilience and creating durable portfolios for the long run, because just as these companies are trying to create a durable earnings outlook for their shareholders, we're also trying to do the same thing on the investment front. And the best thing that you can do at this point in time right now is try to find those pockets of opportunity that is just going to shore up your portfolios.
Where are you finding
Right,
this? Yeah.
exactly. So even earlier this morning, we're talking about what's going on with the U.S. and selling assets, and the U.S. maybe trading like an emerging market country, given what we're seeing with currencies and the like. What we're talking a lot about right now is portfolio resilience. So what does that mean? One, on the public side, we're talking a lot about making sure that client portfolios are globally diversified. I think we need to remember where we came into earlier this year. S&P was up over 60% over the past couple of years, all of that, a majority of that driven by the Mag 7. So we acknowledge that a lot of clients had a lot of assets within the U.S. ecosystem, which made sense, but that global diversification was important. And then two, even legging into less correlated assets outside of just the public market. So we're talking a lot about infrastructure as well, which has not just the diversification benefit and the correlation benefit, but also all of these like secular tailwinds when you think about revitalizing U.S. energy infrastructure and the power demand that's going to come from artificial intelligence. We're leaning there too, because in this time of macro uncertainty, we actually like to lean into areas that are a little bit more secular in nature, that we can kind of be above the noise of what's happening on a day-to-day basis.
Just on a very headline level, though, we've seen assets sell off, but this is still an equity market in the U.S. that is trading at, price to earnings multiples of something like 20 times. It is still very richly valued.
Yep.
Does that mean that this rotation into something that looks more normal, something more diversified, something more global has a ways to go?
I think so. I think that there is probably a ways to go in terms of seeing some of the rotation into the areas that are more highly valued and to not. But I also think that it makes sense as an equity investor to be bottoms up. I think that's the biggest thing. If I can give the one tagline, is that maybe the index level, it's going to be a little bit of a tougher ride, but that bottoms up focus is going to be extremely important, because we've seen volatility increase. And for the first time in a while, we've actually seen stock dispersion increase alongside that. We've seen stock dispersion levels, if you look at various indices, that are at the highest level that we've seen, even above that what we saw in COVID. So from our perspective, you got to find those bottoms-up opportunities. And even in areas, let's talk about the elephant in the room, which is technology, and what do we do with many of those areas. We still think that artificial intelligence is a secular trend that's going to stay for multiple years. Now, the biggest change for us in terms of what's happened so far this year is shifting from some of those highly valued areas like semiconductors and shifting more into software, because we're shifting in the AI paradigm shift landscape as well, less from the hardware side and more the application side.
There had even been this concern there on a very macro level that perhaps we were entering an environment where U.S. exceptionalism for tech takes a backseat because of the challenges coming from China. Is that enduring at all? Is that a real threat for American tech and the AI trade that has been so dominant?
I think that it's definitely, I don't know that if it's a threat that the leadership in the United States is going to change. We still have really strong companies when you think about the mega cap tech companies too, but I think it brings more people to the table, which I think is important from from when you're trying to think about the durability of an equity market rally, whether it's in the United States or whether it's in global markets, you need to see breadth in order for that rally to be durable. So when people ask me that question, which I think is a very fair one, I'm actually happy to see that we're starting to see more entrants into the space, because increased competition is only going to be good for a secular trend, because at the end of the day, you're just getting the best products out there to the consumers at the end of the day. And then as a shareholder, that's just going to boost returns over the long run.
I got to say, one of the best headlines I saw from earnings last week came from Schwab when they reported earnings. And they basically said, our clients are buying the dip, but they're asking for help. This idea that people want to stay fully invested,
Right.
but the sentiment is very poor. What are you hearing from your clients? Where is sort of the sentiment match with just how invested they want to be in this market?
So honestly, I think we reflect the same sentiment. There's a lot of folks who have had appetite to buy the dip. They've been waiting. We came into the year with clients at very elevated levels of cash because they've been waiting for a pullback, because the markets have pretty much just been going up and to the right within the U.S. So the client appetite is definitely to lean in. However, it's less at the index level and it's a lot more at the bottoms up level, which I know is something that I've said quite a bit, but it's, I think, reflective of the fact that not everything, the rising tide may not lift all boats, and the need to be selective is really key, which is why we're here.
Yeah, well, good place to end it with the takeaway, bottoms-up analysis.
We need to do it. It's finally coming to fruition once again.
Love it, Sitara. Thank you so much. Hard work finally paying off.
Yes.
Sitara Sundar of JPMorgan Private Bank, please come join us again soon. All right, let's get you some other top stories that are trending on the terminal this morning. TSMC says it's facing challenges in ensuring export control compliance by its customers. It cited an incident last year which chips ended up with Huawei through intermediaries. It said the constraint is hindering its ability to prevent unintended end uses of its chips. Tesla bull Dan Ives warning that the EV maker is facing a, quote, code red moment. Tesla will report first quarter earnings tomorrow. Ives said that CEO Elon Musk should focus on Tesla and step back from his work at the Department of Government Efficiency, which has caused brand damage to the company. U.S. Vice President J.D. Vance has arrived in New Delhi, where he will be holding a bilateral meeting with Prime Minister Narendra Modi. The trip comes as the U.S. is threatening to increase the 10% tariff on Indian exports to 26% if no deal is reached by the end of President Trump's 90-day pause. This is Bloomberg.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Chicago Fed President Austin Goolsbee there stressing the importance of monetary independence after President Trump truth socialed that Powell's termination couldn't come soon enough, followed by Kevin Hassett, the National Economic Council director, saying that the White House was studying whether or not they could remove Powell. Joining us now is Bloomberg's Tyler Kendall in Washington, D.C. Tyler, can they remove Fed Chair Powell?
Yeah, hey, Danny. So that's one of the biggest questions here. Jerome Powell himself says that he doesn't think President Trump has the legal authority to fire him and that he wouldn't step aside if he did. And right now there is legal precedent on the book that should theoretically protect him. He's protected under the Federal Reserve Act of 1913 from being fired without cause. But there are questions here about potentially just removing him completely or, say, removing him from the chairmanship. This White House already has multiple legal battles brewing here that could extend beyond the Federal Reserve, but to other independent regulators that would then have an impact on the Federal Reserve. One of them is that the administration is asking the courts to review the legal precedent known as Humphrey's executor that applies beyond the Fed to other independent regulators to protect them from being fired for political reasons. There's a case right now that's brewing. It's expected to be decided by the Supreme Court that's looking into one other independent regulator from the National Labor Relations Board who says he's been fired without cause. This administration is really pushing the judicial branch to side with them, saying that a precedent has often overstepped the executive branch's authority to place who they want to help establish their own policy goals. So really some big questions there as this administration pushes that they would like Jerome Powell to cut interest rates to help offset the incoming tariff policies. And you mentioned Kevin Hassett. That was potentially one of the most important comments that we got on Friday, suggesting that this White House is already well underway into the process, looking into potential ways to remove him.
Meanwhile, the clock is ticking down on getting trade deals. At least that was quiet over the weekend, Tyler. And I wonder if it's a concern that progress was quiet over the weekend. Japan saying that they won't keep conceding to U.S. demands. South Korea's president saying that tariff negotiations with the U.S. won't be easy. Tyler, Japan was supposed to be one of the first trade deals done. What does it mean we got through the weekend and we didn't hear anything?
Right. Well, one of the first to get deals done because this White House said that they appreciated that Japan had reached out early and directly to President Trump. President Trump last week, we know, said that he was directly involved in those talks, which was considered to be highly unusual considering that the talks weren't at that leadership level. Now, while we didn't get progress necessarily when it comes to updates from the White House, President Trump was still posting on Truth Social all weekend about exactly what he wants when it comes to a deal. And he really honed in on those non-tariff barriers that we often hear, like lax IP protections, regulations, other sorts of standards. Actually, in one of his posts specifically calling out Japan when it comes to car standards for U.S. imports into the country. So clear that President Trump himself, tariffs were on his mind as he was trying to push forward or move ahead these trade talks. Now, our reporting does indicate that while Japan did have these tough words about not giving forth too many concessions when it does come to trade negotiations, local media is reporting that they actually are considering potentially laxing some of those standards when it comes to U.S. car imports, as well as upping soybean and rice imports into the country. So potentially we could see some movement there. But it is important to keep in mind that those countries that did get priority were those countries that, one, reached out, but also were geographically close to China, Japan, South Korea, Vietnam, countries that we know that Xi Jinping last week on his Southeast Asia tour were also trying to target to shore up his own support. And Danny, I would just quickly add that there was also news over the weekend, China responding pretty harshly to reports that this administration is looking for other countries to up their own tariff barriers, their own non-tariff barriers, too, in a bid to counter China as a potential exchange here when it comes to negotiations with the U.S. China saying that any countries that do that, potentially impose a so-called secondary tariff, as one example, would face their own counter-retaliatory measures from Beijing.
Tyler, thank you so much. That is Bloomberg's Tyler Kendall. And let's stay on that story. What Tyler was speaking of China warning, do not make deals with the U.S. that could harm Beijing. Joining us now is Bloomberg's Bill Ferries in the region. Bill, we heard a little bit from Tyler there, but what exactly is China warning to trading partners of what not to do?
Well, they're concerned, as Tyler was mentioning there, that as all these countries are beginning their negotiations with the U.S. over those so-called reciprocal tariffs, that the U.S. administration is pushing for some very non-tariff related components to be a part of those deals. So it could include things like having countries put tariffs on other trading partners who are allowing Chinese goods to flow into their countries, kind of, as supply chains have been rerouted. So third country goods coming into the U.S., that's something that the U.S. is taking a look at, saying maybe you should restrict that kind of trade. And China really trying to pitch itself as a more stable partner. The reality is, for many countries, China and the U.S. are their two biggest trading partners. They don't want to do without one of them. They really can't afford to lose both of them. But they're stuck in the middle here. And China's saying, listen, we're not the ones putting on tariffs, then revoking tariffs, and then putting on other conditions. We're the ones who are trying to keep stable policy. We are a more stable partner. So that's the pitch Xi Jinping is making to countries around the world. He made it very up close and personal in his tour of Southeast Asia last week. And I think it's something we'll continue to hear them talking about.
Can we also look at, Bill, what China is doing beyond increased tariffs as this continues when it comes to commodities? I know there's also an FT story about China no longer investing in American private equity funds. What routes is China taking to continue to pressure America?
Well, we've seen them already raise tariffs or export restrictions on some critical minerals that the U.S. uses in everything from its technology industry to the defense industry and jets, things like the F-35 jet. They're talking to other countries. As I said, they're lobbying for them not to give up too much. And they're really trying to push forward this message that they are now the guardians of the global trade order of open trade and free trade. And it's the U.S. that is becoming much more of a protectionist and unstable partner.
Bill, thank you so much for your excellent reporting this morning. That is Bloomberg's Bill Ferries. Let's get to one of our other top stories this morning. Pope Francis has died at the age of 88 at his residence in the Vatican's Casa Santa Marta. He had been hospitalized in Rome in mid-February with bronchitis, which progressed to pneumonia in both lungs, the last in a litany of respiratory and other medical challenges he had faced. On Sunday, he had met with U.S. Vice President J.D. Vance. Joining us now for more on this is Bloomberg's Tommaso Ebthart in Milan. Tommaso, Pope Francis is different in many regards. The first pope from the Americas, the first Jesuit, donned a more simple wardrobe. Just what legacy is Pope Francis leaving behind?
Hello, good morning from Italy, which, woke up today with the news at 7:35 a.m. was announced that Pope Francis has passed away. He's leaving a legacy of simplicity. This is somehow how he would like to be sort of remembered. And this kind of style of his papacy we saw until the end. He had been hospitalized in February for almost 5 weeks for pneumonia. He didn't hide somehow his health situation. Then he went back to the Vatican. He was portrayed in the last few weeks attending some events in Vatican in an armchair. He was, critical ill for a while, and he didn't hide sort of himself. And until yesterday, when you said he met with the U.S. Vice President J.D. Vance and also made a very short speech on Easter Sunday on the Vatican Square. And so until the end, he wanted to be, one of the people. He didn't leave his papacy. He didn't spend much of his time in the Vatican. He always wanted to go away outside and meet the Catholics all over the globe, and especially in Rome.
Yeah, earning that nickname, the People's Pope. Tommaso, thank you so much for helping us remember Pope Francis. Bloomberg's Tommaso Ebthart. Again, Pope Francis has died at the age of 88 years old, the spiritual leader of the world's 1.4 billion Catholics since March 2013. Francis hailed from Argentina, as we said, making him the first pope from the Americas and the first Jesuit to hold the position. Let's get you set up for your trading day on this Monday morning. The IMF World Bank spring meetings, those will begin today. And then throughout the week, Tesla will be kicking off Mag 7 earnings on Tuesday. Alphabet, it reports on Thursday. We'll also get U.S. PMI data out on Wednesday, along with new home sales. Let's look at some of the stocks on the move. Tesla lower. Dan Ives of Wedbush warning of a code red moment for the first quarter ahead of its earnings. By the way, CATL also unveiling a 5-minute charger for EVs. Next, TSMC, that's down more than 1.5%. Warning of challenges of ensuring export control compliance with the trade war ramping up. And finally, Netflix reported earnings after the bell on Thursday, extending those gains up 3%, showing a lot of resilience despite that tougher macro environment. Now, the macro environment this morning of one is one of sell dollar versus everything else. Against all of its major peers, the dollar is lower this morning with both fears of the economy and Fed independence. All right, that is it for your Bloomberg Brief. Surveillance takes the reins from here. This is Bloomberg.